We were lucky in the sense that we got two of them yesterday, last couple of days, but typically you don't. Typically they're all reversals, but in this case we got we got a good reversal. We got two pullbacks here. So this was a reversal entry, and where do you look to get back in? Again, you draw the two dots, extend the line forward, and we'll go into an entry and we'll see that this is not an entry here, because typically we need to get a move above the high of a green bar. That becomes your entry. So we had a green bar here, but we didn't get a move above the high of the green bar. And this is where our entry was. And not only is this is a combo 2 setup, because it's a trend channel line intersecting prior support. So this was your entry in on the long side yesterday, right up, I forget the exact time, but right around towards the later part of the day. So that's what you want to keep in mind. So where is my lowest risk entry? Is it a pullback setup? Is it a reversal setup? Those are the things that go on in your mind. I'm sorry, not yesterday, the day before yesterday. So if you look at this chart, what are these things telling you? They're giving you the exact turning points of the market live as the market's going. And when you do this live, and I often do this, I do this live when the market is rolling, sometimes when I teach. And it's actually a lot of fun to see, because when people see it live and they can see the trade and see the bar and they see it turning, then you say, oh my gosh, it's really working. It does work. So given this was the end of the day yesterday, what is the highest probability trade here? Is this a pullback setup or reversal setup, or what kind of setup is this? Anybody want to venture a guess? This would be a reversal setup, right? But it would be a low probability trade because you're picking a reversal. So even though it did work, so this was yesterday at the close, and this morning it gapped down. But basically this is telling you that this is the end of the move, of this move at least. That's actually, if you don't mind, I'm actually going to let's look at the live chart, and we'll see how this continued today. Let me see if I can get this. So here was the chart we were just looking at. Here's the slide we were just looking at. So here's where I said this is not a high probability trade, in the sense that it's a reversal setup, but at the same time you can see what happened. It gapped down afterwards. So this was this morning, right? And where were the potential trades today?
Voss, we don't have a chart up here.
Oh, you don't have the chart. Okay. Let me see what could be going on here. Can you see it now?
There we go.
Okay. Sorry about that. I thought I was sharing my screen, but I guess I wasn't. Well, this is basically, just to recap, this is the slide that we just looked at is basically the Qs live, not live, I mean on a 5-minute chart for the last 3 days. And this is today's chart. And you can actually see, so this was the setup on the close of yesterday, a trend channel line to the top side. We didn't get an entry bar because it just gapped down, so we did not have an entry here. Again, this was a low probability trade because it is a reversal trade. And today, what was the high probability trade? Right here. This was your trend channel line. One of the things you'll notice is we did not get a dot here because we didn't have 5 bars on this side. We had 5 bars on this side, but not 5 bars on this side. But sometimes when you've got a gap or you've got something more meaningful, you don't necessarily need to have a dot. The dots are there to help you. You don't need to have a dot. So in this case, this was a trend channel line. So here was your trade, right? Connect the two. And so your entry would be below the low of a red bar because you're going short. and your risk is above here. So your risk is here, your reward is way down here. So initial target would be something in this range, and potentially further more than that. Now, what happened at the end of the day? Again, we connect the dots, right? You connect this dot to this dot, and towards the end of the day today, we got it. What time was it? Around 3:30. We got a potential reversal entry again. Is it a high probability trade? No, because it's a reversal setup. But at the same time, like I said, in intraday charts, you're not going to get any pullback setups. You get very few pullback setups. You get a lot of reversal setups. But this is telling you, what is this telling you for tomorrow morning? You got a potential move up, right? It could either be a gap up, or it could be a retest or something like that. But we still need a confirming factor. We still need it to go up, but it's telling you to be more on the bullish side than on the bearish side. Does that mean it has to be bullish? Of course not, right? It's just telling you that's the setup right now. Does that make sense? Everybody kind of clear? Let me go back to my slides again. Give me a second. Let me see if I can figure out how to do that. Let me share. Slides. Share. Okay. Everybody see my slides? Dennis, can you see my slides?
Yes, we can.
Okay, good. Okay. So let me actually go into trade entry, which is the last item in the setup. Basically, what we're doing, once we get a pullback setup, we typically go, let me actually go through the entry rules is basically you enter above the high of a green bar. So your entry would be something like this, above here, with your stop underneath either that bar or underneath a significant low. So in a case like this, you would actually want to put your stop under this low. So your risk is approximately a bar plus a little bit more, maybe a bar, bar and a half, maybe 2 bars, something like that. And as the trade continues on, you're going to be looking for prior areas of resistance as potential places at which you can take some profit off. You don't have to, there are different ways to manage this thing, but you don't have to take some profit off, but you could. So as it comes up and breaks out here, you could say, I might want to take a little bit off here and look to add on if it comes back for a retest. So in this particular case, it came back for a retest a couple of times. This is what I was saying. Sometimes pullback setups, they don't go in your favor right away. They just kind of like meander sideways for a very long time, and then they decide to take off. So oftentimes pullback setups will really test your patience. Just like reversal setups will test your patience even more. Sometimes pullback setups will do the same. It'll just go sideways for a while and then take off. And then what you do as it comes up to another trend channel line on the top side, these become really good areas at which you can actually take a bulk of your profit off. Now, if it's an aggressive account, I usually recommend taking everything off, or you can leave a little bit on and take a lot of it off. If it's a long-term account, something that you want to build a position in, or if it's a dividend account or something like that, you don't have to take that. You can just leave it on, and then even if it comes back down, you would add to the position rather than try to trade that back and forth. But for aggressive accounts, you want to try to take some of the profit off and then come back and re-enter again, or look for another stock to do the same thing on again. Does that kind of make sense? That's one way to trade it. You don't have to trade it this way, but that's one good way to trade it. So basically, let me do a quick summary of the setup. Basically, we're looking for a strong trend on an IBD type stock, something that's very strong movers. And it doesn't have to be IBD stocks, but typically IBD stocks are like that. And typically I say focus on tech, medical, or Chinese stocks, because these stocks really, really move, especially for aggressive accounts. For stuff like dividend accounts or building long-term positions, you don't have to do it on these. You can do it for big cap, mega cap kind of stocks as well. Now, next thing you want to do is identify the pullback that forms a trend channel line overshoot. As we just covered, you want to look for a combo one or combo 2. Once again, a combo 1 is a trend line intersecting a trend channel line. A combo 2 is a trend channel line intersecting prior support. Now, ideally, you want it around the 200 MA. Those are the deep pullbacks are usually at the 200. Shallow pullbacks are usually above the 200. So that becomes a good way to distinguish between the two. Shallow are usually way up there, whereas deep ones are right and at or below or right around the 200. It doesn't have to be above the 200, but in that vicinity of the 200. And lastly, we also want to look for it at or below or close to the lower Keltner band. And the Keltner band that I have chosen is approximately 2.6 standard deviations away. So what it's telling you is that we're very close to the extreme of the probability curve. So 95%, something like that, a move in that direction. So it's moved to an extreme in a strong trend, and we're looking for the trend to resume. And again, we look to buy above the high of a green bar, and ideally we want to have a well-formed green bar. And lastly, we look to place a stop approximately a bar and a half, something like that, below the low of that green bar. So you know right away where you're wrong, because your stop is just under where you get in. And if you're right, you're X times that bar. If you're wrong, you just lose that bar and a half. So your risk reward is always multiples of your risk. I mean, your reward is multiple times of your risk.
Voss, are you going to talk about how you use your software to screen for some of these setups?
Yes, I'm going to talk about that after I go through the summary. And I have a whole bunch of examples.
Good.
And then I'll go to the software after that. I'm not sure how we're on time, but
we're doing,
if we have time,
we're doing great on time. You got at least another hour. You need it.
Oh my gosh. I thought I was restricted to an hour. So I kind of limited everything to an hour. But if there are questions, we can talk. Or we can look at some live charts, and we'll look at some setups that are forming in different watch lists, and we can talk about some other things as well if anybody has any questions. So one more time, putting it all together, I'm going to cover some more steps besides those 4 that I just mentioned. Keep in mind, it's always a trade-off. Nothing is ever perfect, so you're always judging one versus the other. And in an ideal world, everything would be perfect, but it isn't. So the first thing you want to always do is choose the best of the best stocks. So your universe is always the best. So even if you screw up, at least you know you got a good stock to start with. And you want to choose stocks with strong fundamentals, leadership stocks, stocks with high margins. And they're typically IBD stocks. IBD is about 70% focused on fundamentals. They're very, very strong on fundamentals. So you can't become an IBD stock unless you got great fundamentals to start with. So that's a good list to look at all the time. And the second thing you want to look at is a price pattern with a low risk entry. So like we talked about in the previous slides, these are the combo 1s, combo 2s, and your trend channel line pullback entries. One of these 3. Ideally, if you can get a combo 1, those are ideal, but any of these will also work. So once you got number 1 and number 2 down, that's like 80% of your job right there. If you can get this down and nail this, you've got it, most of it. The rest of it is all like more like gravy. So you want to look at a nice price action right before the entry. You want to avoid big gaps. You want to avoid channel down moves. You want to avoid spikes. Anything that doesn't look clean, you want to